So it looks like the silver price has been on a relative rise recently, relative to what it's been doing in the past few months. So let's go back to the daily. We can see the general trend here was very bearish until we hit this nice, what seems to be forming is a small short-term bottom here, and we have an upward sloping slant right here, which is nice and bullish. We've taken off from this point. What we'd generally like to see to maybe make this move up to 35 is if it were to come up a little bit more, maybe to the 33 mark, come back down, correct at around 31, between 31 to 30 somewhere, and then take a nice strong run at this 35 level up top here. But as I've been stating before, there's a lot of resistance above. The price is going to get very volatile. As we can see here, we've had this very long downdraft right here, and then we moved sideways, and now we're popping back up. So it looks like the price is getting very volatile. As you can see here on the 15-minute chart, we're seeing these drastic rises and then sharp falls. So the volatility is definitely picking up at the moment. So it's currently January 18th. There's still a lot of time before the debt ceiling debates and talks really start to pick up. It should start to pick up mid-February and conclude sometime in March. That's the general time frame that we should be seeing moving forward. So anything could happen. Right now, it looks like a lot of people are switching over to the bullish side. With all the new information that's been coming out about China doubling its demand. We also have Germany repatriating its gold from the United States. And this repatriation was started, like this trend of repatriation was started, I believe it was last year when Hugo Chavez of Venezuela demanded his gold to be returned from the United States. And what we saw after that move was it rose pretty nicely after that. All the media that surrounded Hugo Chavez demanding his gold back. So now we're seeing that happen in Germany. The German people have been basically protesting and demanding their government to take hold of their situation in Germany right now, basically because of the Eurozone falling apart. They need some type of solution to their currency crisis that they're having. So they're thinking about one possibility, which is going back to the Deutschmark, what they had before that they joined the euro. And some are speculating in order for that to be sort of like a strong currency, and in order for it to have some validity in the real world right now, they say it might need to be backed by gold to give it some type of power. Again, this is all speculation. Anything could happen. So yeah, I guess we'll just see what happens going into the future. So let's just do a quick blog roll right here. We have a article here about the platinum price outlook for 2013. So what we're seeing right now is South African mines, the people working at South African mines are basically protesting to get better wages and to be paid more for them basically risking their lives on the job every day. And so now the largest platinum producer in South Africa is threatening to threatening to cut 14,000 jobs. And to do this, I think they're thinking of closing down 3 mines and selling another mine. So this is a good article here. It basically lays out what the deal is with platinum, why it's been going up recently, and it shows you a quick video here about that basically shows you what's going on in South Africa right now. So that's the platinum price outlook for 2013. Next, this was posted yesterday, current gold and silver price update. So what we have is, we have 2 quick articles here, HSBC lowers gold forecast and Thomson Reuters GFMS survey for 2012. So there's some facts here about the gold demand and the gold market in 2012 and the reason why HSBC has lowered its gold forecast for 2013. So one other article I'll go over here is something that I personally wrote. Again, going back to what I try to say in every video, because I really don't want people to take my videos as investing advice. I'm just basically speculating on these markets, giving my perspective on them, and I encourage people to debate my opinion in the comment section below. So what I'm saying in this quick article right here, that I personally wrote this all. I took about 3 hours to really think about what's going on in the silver price right now. And the crux of my argument is this arrow you see right here marks December 31st, 2012, and that is the day that the United States hit the debt ceiling. So what I'm basically speculating on in this article is the fact that the United States hit their debt ceiling on this day, and that means they are not allowed to borrow new money to help it pay all the country's financial obligations. So, operating under the assumption that prices are being artificially suppressed due to the paper manipulation that many bloggers and many article writers have been warning about in the gold and silver market. It's also a generally accepted norm in the silver community to believe that the prices are being artificially suppressed in order for the United States to hide what is going on with their deteriorating currency. So, operating under the assumption that they are artificially suppressed, would that not mean that this day right here would mark the last day that they would be able to borrow as much money as they wanted to artificially suppress these prices? So if this day marks basically a day of weakness for the silver manipulators, then would it not be logically correct that we would see a bounce in prices, and we'd see the prices start rising pretty sharply, basically because the silver manipulators are not flooding the market with these paper sell contracts, and it's more of a free market situation, which is what the bloggers have been saying will be the ultimate reason behind why gold and silver absolutely skyrocket in the future. And the reason for that is because the bankers will not be able to artificially suppress these prices any further. So I'm just rambling here. I'll wrap this up right now. So yeah, the crux of the argument is, if they're not allowed borrowing any money right here, would that not mean we're going to be going up? And then the second the debt ceiling gets passed and they have all this money that they're allowed to borrow to fund their quote unquote financial obligations, if one of their financial obligations is to suppress the price of gold and silver, would that not logically mean that they would use the money to crash the prices of gold and silver?